John, what are we talking about?
Well, soybeans, we have to. The TikTok deal, that was supposed to be the bean deal. Is there any opportunity, and what are we doing for storage and beans? Where are beans sitting? So it's going to be bean heavy at the beginning. We'll hit on corn, and then wheat. We definitely need to talk about wheat. Is there opportunity to down at these extremely low levels with good demand? And we'll definitely talk about subsidies in cattle and good idea or bad idea. I definitely have an opinion on that.
Don't forget about the American Federal Bank Financial Minute, too.
Yeah, general economy stuff, we'll go over that. And is there any good trade ideas? I hope so.
I sure hope so.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, I know where I want to start today because last week I said that I was kind of interested in soybeans and specifically soybean calls. And now, since I said that, they're on sale.
Yeah, the no trade deal, TikTok, it was the only thing they talked about. And, without that and no buying in China, beans are going to struggle going into harvest. Anybody that expects a sharp rally in harvest, it doesn't do that normal years. Why would it do that this year? They are on sale. Most likely China's waiting for the Supreme Court to decide on whether tariffs are even legal. That's in November. They just bought a pile of Argentina beans. They dropped their tax on grains yesterday, and China came in there and bought a pile. Now, guys that are trying to spin that positive are saying, look how bad China needed beans. Just wait till Argentina doesn't have any beans. And I don't know. I mean, that's one way to look at the market. Another way would be that they're not buying any U.S. beans, and we're making history right here. It's going to have a huge impact. Guys are definitely underplaying what's going on with the idea that a stroke of the pen is going to change everything. But every day that goes by, even in the trade war, we didn't have this situation. It was a different time frame. We're going to have all these beans. We have no bid out west, and no one knows what's going to happen. That's the truth. We've never even seen anything like this. We're going to learn in the next few weeks, though.
Did you see the video of our governor talking about soybeans at the Farm Aid concert?
No, I missed that. One. I'm sure he had a great idea.
Yeah, all the storage is full. We're going to fill the barns. We're going to fill bags. We're going to fill... I think he said we're going to fill houses and we're going to fill cars with beans.
The way they handle that is if they don't store it in traditional storage where they know what they're going to get at the end of it is that they'll dock you a whole bunch. In other words, basis is just going to widen out. If they think that they're going to lose X amount of beans, but they don't know, they're going to err on the side of caution. So if it's stored in non-traditional methods, you're not going to get paid a lot of cash for those beans, if you're selling them. So we're going to find all this out. Where is it going to go? What's it going to do to the markets? I've had a lot of calls on spreads, actually, bean spreads. People want to take advantage of the huge carry that we have here. And the way I see it is we don't know what's going to happen. Could November, January go wider than it's ever gone? Sure. I mean, I think it's been out to maybe negative 24. It's around negative 20. And that's been the worst of it, but could it do something different this year? Sure, it could do anything. Other ones that we were looking at are May, July beans, which historically can be good. The worst year was 2024. This is kind of where all the the bearishness of beans began. It widened out to a 20-cent carry for the first time ever. So you got about 10 cents risk versus what we've known in the past. Most of the years that it doesn't go wider than 10 cents. That's pretty. So you got these wide carries. I would rather be in the back end than the front end because of the storage that you're talking about. Obviously, we've talked a lot about the July, November. That's gone down every day since, and that's why we weren't recommending it. We're just saying, hey, if China does come in, this is going to wake up. But it's just a complete disaster. And really, I mean, if there's a silver lining, it's that the price is where it's at. And that has everything to do with the 81 million acres.
I was just going to bring that up. I mean, Imagine if we planted a usual crop.
Yeah, I can't even imagine. And that's what they're going to have to figure out next year. What happens when we do plant like 85, 86 million acres?
Right.
Yeah, this is bad with 81 million acres. Now, the optimist is going to say there's going to be a deal struck. It isn't going to be this. The world needs a constant amount of beans. It doesn't matter if China's buying from us or not. I like to believe that. Like I say, I'm first in line in getting involved in bean spreads because everything's so wide. But the reality is there's absolutely no signs of any of that happening. We are getting good demand in general from the world, and it makes sense. We're the lowest priced beans. Still, we're missing that 25-30% of what we'd normally see. And there would already be a whole bunch on the books for November beans, and we have zero on the books.
The other argument I've seen is if China's going to Argentina now, that the other countries that went there have to come to us somewhere else. And you can make that argument, but we're also producing more beans even with less acreage.
Yeah, absolutely. The world is producing more beans. And that's really the dark cloud that's been over farming is that what are we going to do? We produce too much corn and we produce too much wheat, and now we produce too much beans. And that's really been the bailout for traders is like if we get into this situation like we are with corn this year where there's too many acres, well, that comes at the cost of bean acres. Beans are bullish, and we would ride the coattails of beans in the past. Now 81 million acres of beans is too much, for the market that we have. Right. And that's where the problem is that we don't have that market to bail these other markets out. They're just slowly all getting very bearish. You go online and that's not what you're going to hear. You're going to hear these need to be in line with inflation. And I would argue that corn has a lot of inflation in it right now, being 90 cents apart or 89 cents apart from corn, which is extremely narrow. So the wheat guys, in my opinion, have the biggest gripe down here. But, with the gluten-free diets and the West not eating as much wheat, it was already bad enough. But we haven't talked wheat in a while. That has great exports. Have you been following that at all?
I have been watching wheat, and it's been an interesting market because really since I started in the business, the wheat exports from the U.S. have been mediocre. That's probably the nice term for it. And to see the export numbers now, to see the price too improvement over the last few weeks. Now, you brought up quite a few weeks ago that wheat does tend to trend this way to get guys to plant it for the winter. So
it tricks them.
Are they tricking them, or is it good numbers? Is it world need? Where are we at? What is the deal with wheat right now?
You do generally see a rally as you go into plantings, but they have a lot of subsoil moisture, or more than they've had in the past, and there's really no concern. And then we have growing ending stocks in Minneapolis wheat, Chicago wheat, and Kansas wheat. And really that's the headwinds. World wheat's growing now. It had been shrinking, and now that's growing. Is there any opportunities? Are guys doing anything in these markets? Yeah, I mean, they're kicking the tires. I like the corn wheat spread, but you can't expect wheat just to blast off and leave corn in the dust. I mean, that comes with a lot of risk. It hasn't been working so far. Guys are pretty patient with that. Then is there any bull spreads in wheat that would work? No, not really. Until you get tight, you can't expect the bull spreads to work. And then it goes to, if the bull spreads aren't working, it's wide carry. That makes it hard to buy for time, meaning like you can't just go out there and pay for May because you're paying 30, 40, 50 cents more than the front. Well, why don't you just buy the front? The front's been going down almost every day. Right. And, so we go around in circles, and wheat's just been bearish. Finally had a good day today. We have good news. Could it be forging a bottom? Absolutely. I mean, obviously the stop would be somewhere below the old low, which is not far away. If you're a bottom picker, that has not worked at all, by the way, in wheat so far, being a bottom picker. It would have got you stopped out. But you never know. One of these times it's actually going to be the wheat bottom. There's not a lot of news other than the good exports. Not enough world weather affecting stuff. And then the European wheat and Paris milling wheat has been really getting hammered. So just wheat is just really sold off. Likely we're coming into a bottom. A guy could look at selling puts here. I haven't looked, but I have a feeling the volatility is not high enough, for the amount of risk. You probably can't get much for like even a 480 December is my guess. It's probably around 9 cents if I had to guess. And that goes with beans, corn, and wheat. Selling options is really difficult in this market because the implied volatility is so low. But the good news is swing trading has been working for guys. Guys are buying dips and doing okay in corn. Guys are selling rallies and beans and now doing okay. And then they've also been buying dips in this stuff, and it's been working except for wheat. So the 2 to 3 day swing trading's actually gotten to be pretty reasonable. But other than that, I mean, you're not going to find a lot of opportunity in any of this stuff. I had some luck with some bean puts. Wish I would have moved a little bit earlier after I saw the TikTok deal. I figured, that sounds pretty far away from soybeans.
Right.
When they're only talking TikTok. And I kind of like, well, maybe it's already in the market. No, I mean, I had plenty of time to buy the puts. A couple guys did, and they did all right. But still, you're looking for that 5, 6, 7 cents, and then you get out of there too. Yeah. There hasn't been home runs. It's all singles, maybe a couple doubles.
Yeah, and it really is about the swing now, and it seems to be in the 3 day time frame. Like,
yeah.
Watching those levels and kind of picking a level that's of interest to you and paying attention to the news. And to your point, it's worked both ways.
Yep.
I mean, over the last 2 weeks, you could have been on both sides of soybeans and you could have made real good money depending on where you got in. So
if you get in with the swings, you're able to make some money. But you also could fall out of sync really quick with the swings too. So it's hard to know what to do on any given day. I kind of wake up and see how the market feels. It felt like it could sell off after the TikTok stuff, and it did. So that's the good news is it is actually making more obvious moves. A lot of good news for wheat lately. And then it kind of started moving up. Like when I first started trading 1999, 98, or probably 97, oil was $11 and corn was who knows where, buck something, $2 maybe. And this is the way it used to be. Like you look for those 3 day swings and it would be for 4 or 5 cents. I remember walking around Kansas City one time and I got a call, or I called my broker at the time, and he said beans moved 5 cents. I mean, then that was a large move because China had just started buying U.S. beans. So I was here when they first started buying and it was making a difference. And now I'm here when they aren't buying and it's making a difference. So I've seen the whole cycle there. But that's the way it used to be. I mean, sugar, I traded a lot of sugar or traded some sugar. Cattle, you wouldn't expect, 40 cent move, 50 cent move. And then you're maybe taking profits. And that's just the way it is. The markets are getting like that in the grains now. It's still a lot more than it used to move. You're doing the daily ranges, but you're just kind of trying to pick the pockets of the other traders. That's the markets that we have right now. And now that we have to wait for more news, what are we at? Yields, I mean, it could change in corn. As a matter of fact, the corn is holding a great premium considering the news. It's not trading 186. It's not trading 99 million acres. It's trading who knows what. It's probably trading 182. And it's probably trading a lot less acreage than they're putting out, because if we were trading those numbers, we wouldn't be where we're at. We're at 460 for December 26. A lot of interest in that, by the way. A lot of people asking about it. Guys are probably locking it in. This is how bear markets work. They start getting guys to market, defensively. I have a hard time taking out the upside of a market that could go up substantially higher if South America or the U.S. has bad weather. Other guys are like, I just want to survive on the farm, and they're selling 460. Tough time of year to do that, but I can't blame them. Where we come in, we would be the guys that would say, hey, if something changes, we need to buy calls, or if we get a large dip, these 460 sales. Let's say you sell 460 December, dip 40 cents. We're at 420 in winter. Are we looking at 460 calls to go through summer, 480 calls? I get creative if you are doing that. Call us and we'll tell you how we're doing that. But I wouldn't just settle for 460 if I could help it. But at the same time, you can't blame guys for being defensive. But then when markets start going higher again, that's when oftentimes it's missed. The big scary number in the fall, market everything for a couple of years, and then everything changes by winter. I hope that happens. I don't hope people market poorly, but I hope we have a curveball here, because this is not good. I do worry the market's ignoring the fundamentals. I mean, what do you think?
Yeah, well, anything to make the markets more interesting from my point of view, but that's not necessarily great for the producers. So no. I hope we have something that's going to change fundamentally. That's really what we need to see. And I mean, that's probably China coming back to the table or some sort of biofuel, something that way.
That's what I think is the two things.
Some of those. I hear a lot of USDA check talk. And that's not what we need, in my opinion. I mean, I'm sure there's guys out there that need a check.
They're going to want it, but it's still keeping the inputs high. I think everybody's kind of catching on to the cycle that we've been in. And it's hard to be very doomy and gloomy, but it doesn't look good. Like I say, when you have low acreage and you still don't go up, we don't know what the yield is on beans. That could be a big wild card. But we really, you really got to stretch to make this run a lot. A lot of people have to market old crop corn. I'd be trying to beat my neighbor, so if you have like 450 and, be 448, be ahead of these guys because there's a lot of corn to unload. They're still unloading corn from last year.
Yeah.
And, that's what makes it tough. And then it's where are we 425 in the front and we're 460 in the back end, 440, 450. I mean, where do people expect this to go? March to $5 already? It was a lot better numbers last year, and we were, we did go to 450. As a matter of fact, last year in September we went to 450, and in December a lot of people forget that, and we went to $11 in beans. So it's kind of doing the same thing this year. It's ignoring all the bearishness, going up in September when you would expect weakness, but then in October when it normally goes up, we crashed. We went to 980 in beans, or around there, 990, and we went to, oh boy, I think it was 419 for December corn. So we came down 30 cents very quick. I still think that that's a possibility when they start bringing this in, realize how big it is. Other guys are on the other side saying, this thing's tiny. Once you get out there, the secret's going to be out and it's going to blast off. But you hear that every year.
Right. Absolutely. And that's why you always talk about leaving your upside open, though. And there's ways to do that.
At this time of year, you want to do that. You also can't pass on these rallies. So you better get better at figuring out how to cover bushels that you're sold if there's an opportunity that doesn't set you back too much. Just these hard, fast cash sales, this is going to be a really tough environment for people. If you're just a cash guy, I think you're going to struggle in these markets. If you got to pay for storage, you're going to struggle. Rent and storage. You better start getting creative. We're here. We'll talk your ear off. I'm not saying I have all the ideas that's going to solve everything, but you better start getting a lot more creative than you've been in the past because the margins aren't there for just cash marketing. It's not working.
Right. Let's talk real quick. We mentioned earlier USDA checks, and there was some news about cattle subsidies from that side too.
What a great idea. No, it's the same. What I'm hoping this is they're probing and they're trying to get some feedback. They've done this in the past. And then I would guess the feedback is very negative right now. Sure, there's going to be guys that we're going to hold back anyway that are cheering for this. But, what it's going to cause is a disaster down the road. And I think people read between the lines immediately. It would make it short-term bullish, but longer-term really, really bearish if everybody did the same thing exactly at once. It would really disrupt the cattle cycle. We had the screwworm 70 miles from the border. I don't know how they're getting cameras on these flies, but they seem to know the mileage all times.
Exactly where those flies are.
So they're creeping closer. It's getting scary. The market took it as very bullish yesterday, meaning the border's probably going to stay closed. But if it's 70 miles, I'm sure it's 40, and it's probably already in the United States. Because the range, is 150 miles? How anybody knows any of this? I mean, I guess that's why you have scientists that study this.
Right.
But it would already probably be here if it can make it 80 miles past, where they already see it.
What, in your opinion, all of a sudden screwworms here in the U.S., maybe already, to your point, what does that do to the market?
Well, is that pink slime? Is that going to scare consumers like, ooh, that sounds gross, I'm not going to eat beef? The bears would argue that, and the bulls would say, it's going to be less cattle. It's a really, they had it in the 70s, I believe. It was hard to get rid of, and it's the producer loses money, he loses cattle. It's nasty, and basically it starts eating the flesh alive, and it's really hard to get rid of. I would think it would turn some demand off, but I don't know. They're seeing it as the border is going to stay shut. So it's bullish. So right now, that's bullish. I don't know how the market would react though longer term. I don't think it would be a positive. No one. I've talked to a lot of cattle producers. Nobody seems to think it would be a positive, but it seems like a reality that we're going to be dealing with very soon. But
let's hope we don't have to. But
yeah, the subsidies though. I mean, what are your thoughts on that?
I'm never a fan of subsidies in general, but there's times that they can be advantageous. I don't think that makes sense for herd building.
No, it doesn't make a lot of sense.
So from that perspective, I mean, that being said, I'm going to rent some pasture.
Yeah, we're gonna.
I'm in the cattle business now.
Yeah, we're gonna have to get in the cattle business here somehow. Yeah, right at the top. That seems like a great idea.
Yeah, hey, get me some LRP and some puts. Yeah, I'm ready to go.
Yeah, subsidize me. We'll see. Cattle guys never have really had that. I don't think this is going to go over very good. It obviously shoots themselves in the foot. I think they realize that you're going to disrupt the cycle in a bad way, most likely, when you get involved like this. So I think it's an idea that's going to be pretty short-lived. We'll see. I mean, who knows? The market obviously thinks it's going to happen. It went rocking and rolling yesterday. One of the biggest up days in the entire uptrend was yesterday. Just when everybody was safe and there was no margin calls, yesterday happens
and the $4 or something.
The whole nightmare begins. So what is the cattle outlook? Box beef is dropping, and it's been dropping. Packers margins are going to go negative. You got the market saying you have to pay up for it. The front isn't leading at all. September lost like $7 or $8 to October in the feeders very quickly. October is $3.50 under December. Highly unusual it would be doing that. So the front saying they're not going to pay up front, but we think it's going to be really bullish in the back. That's not super healthy for a bull market to be structured that way. You'd rather see the demand up front. Instead of we think there's going to be a lot of demand later because of these government programs or the fly or whatever. Yeah. So I could say it's a very mixed signal. It's getting close to the all-time highs again. Very dangerous up here. Everyone knows that the margins aren't there. You're going to need to see box beef move higher, and you're going to see the cash need to move higher in order to sustain that. And we've had trouble up here, so we'll see how it reacts to this latest rally in cattle. Softened up a little bit in the front only today. Of course, the back end is coming up because they're a little more hopeful that it's going to continue to be bullish for years out. But there's going to come a day here, and hopefully we can recognize it, that the hedge is what's going to make your money as a producer for the next 2-3 years. I don't think we're quite there yet. We'll get there. And then if a guy recognizes it, you're going to be the guy getting 250 or 240 or 230 for your cattle. And the other guys are going to be getting 190, 180 with probably higher feed costs as well. And it'll be devastating. So hopefully we can help guys time it. That's what we're going to try to do. Right now, there's no signs of a top, even though it started looking like it. Now it's back on. I think it's going to struggle demand-wise at this time of year, but we'll find out.
Yeah. Well, let's take a minute for the American Federal Bank Financial Minute. What are you seeing? Financial markets, gold, silver. I saw gold hit a new high. Is that?
Yeah. Stock market goes up every day. Why do we should just be buying stock market full time. We could have a stock market podcast that says
and just say buy today.
Yeah, it could be like a minute-long podcast that buy today. And we'd probably be the most popular podcast in the U.S. because it goes up every day. Yeah, we're getting lofty up here. It's been lofty. It's been a very suspect rally for more than a year. I still feel the same way. AI, I guess, is the boosting this still. Interest rates dropped a little bit in the short term. Longer term, I think, ticked up. Like the mortgage rates, I think, actually ticked up after they cut rates. So you got a tale of two different worlds there. We were at 6.1 there for a little bit. I think we're at 6.3 now. So short term, they're cutting rates, but the argument is inflation's still here. And I think anybody with half a brain realizes inflation's here. But you got signs like the freight index dropping like crazy, meaning stuff's not moving around. People aren't buying stuff. The need for freight and trucking isn't as high. There's warning signs all over the place. Overextended, people on credit cards and auto loans, but really no smoking gun says like a 2008 type thing is imminent. But you can just feel it. I mean, it feels wrong. It feels like you got general inflation, but no growth, negative. It's starting to get negative in the jobs market. Stagflation is what they call this. And it doesn't feel good. I mean, prices just continue to go up.
Been there for 2 years, just not acknowledged.
It's really accelerated in the grocery store, though. I mean, it's even when you think it's gone up, the next time you go, it's more. I mean, pretty much every time.
I went in next door to buy a 12-pack of soda for my daughter for school. $9.
Yeah.
For 12 cans of pop.
Yeah, I quit drinking pop a long time ago. I was amazed. You used to get three for $9.99 would be the sale.
Right.
Yeah. So I mean everything continues
now
to
you're
go
saying
higher.
You're a boomer.
Yeah.
I'm just kidding.
Yeah. No, it's accelerated. You know that there's that chip, tortilla chips, $1.99 was their whole thing on the front of the bag forever. And now it's only $2.99. I mean, it's moved up a lot.
And the bags are half the size.
Yeah, and bags are starting to shrinkflation. So you got stagflation and shrinkflation.
All coming together.
Yeah, so everyone's getting squeezed. It's a matter of time before they run out unless you have the growth to offset that, and it doesn't appear that we do. So lower rates, houses, housing, everything's still going higher. It's definitely not cooled off. So how long they lower rates is the question. It looks like they got 2 more rate cuts by the end of the year kind of in the market. But the longer term rates are saying you're spending too much money and we're going to stay higher. So that has not worked for bringing down the longer term rates. And we just got kind of a mess. I mean, a low growth, low jobs, prospects and higher prices. It's not good. I think it's just a matter of time before that starts affecting all the markets. We're going to have one of these podcasts and we're going to be talking a lot about, the people bailing on the market and, then it'll spill over into cattle. Like we haven't had that in a while. Yeah. We're going to see that weakness in the stock market again. There's no stock market that just goes up every day.
Yeah. Well,
except for this one.
Except for the last 2 years.
Yeah, except for this one.
Or the last 5 years.
Since 2008, really, with a couple. Yeah. What they say is huge dips.
COVID hiccup.
There's been a couple deeper dips, but they only last like a day or two.
Yeah, absolutely.
So that is not a correction. We haven't had a good old-fashioned correction where people are hurting and wondering why when they buy the dip, it doesn't work. Like, it's been since 2008, really, since that's happened.
Yeah, I'll let you know when I'm going to buy.
Yeah, we should just quit our job and buy full-time stock market. And, futures, you only need 10% down. So, hey, why not leverage it if it goes up every day? No, I'm kidding. This thing's a ticking time bomb. I don't know when it's going to go off. We might be gone when it goes off, but I don't think this is real sustainable.
No, I agree with you. Anything else you want to cover today, John?
No. I mean, the lack of opportunity has been well talked about, and we talked about it a lot. I still say this is the planning part. I have been talking to guys on a daily basis, 2 or 3 guys about planning. What are we going to do? Some guys are putting HDA, H2 or hedge to arrive. This is what I'm trying to say. Orders in at the elevators because you are getting a general rally here in the grains, really for no reason, being set back, but you're getting it for corn. So have those orders in. Things happen fast. And call us. We definitely are doing stuff, but nothing super exciting that we want to talk about. But we are, dabbling in the markets here and there.
There are options out there.
Yes.
Literally. And
there is a new crop strategy for corn that I really want to get on. It has a little bit of danger, but call me and I'll go over the details with that and the exact plans I have for that. Just when it sets back a little bit and it's starting to look right, then corn kind of comes up and spoils it. Now, I think the harvest pressure is going to be the next thing a guy's got to focus on. And if it all comes off in harvest pressure, that's where I want to start really getting ready for next year. And if it goes up from here, we're going to start pulling the trigger early for next year's crop. I don't know. Be flexible. That's what I would do. And look for the opportunities, what's not here. One day, by next week, we'll be talking about 4 or 5 different things that we really like. Have an open mind and get ideas in front of you. That never hurts. Get more ideas in front of you. Talk to guys that are in this every day, because being a cash marketer in this is not going to be an easy journey. And you're going to want to know if there's any other things that a guy could be looking at.
Yeah, absolutely. Why don't you leave your number, John?
218-731-1578.
Thanks.
Yes. I don't know. Not impressive.